Guys, good morning. February 4th, 2020, Tuesday. And today, history is going to be made as one of the biggest reversals in the stock market is going to begin shaping up. So expect the market to go higher initially and then expect a huge reversal between 10 and 11 o'clock. So yes, exactly while all the bulls, they're doing this ha-ha again. Hey, there's no crash. There's nothing going on. They're missing out the best entries this morning on the put side. This sequence, guys, is not to be taken as a joke. This is a deadly bearish sequence, 9, 4, 3, 11. So while the market actually appears like it's bouncing yesterday, as we accurately pointed out in the historic analog, it's actually creating the move 11. And that is very important to understand in relation to how things are going to unfold over the next 5 days as the market are dropping by 6, 7, 800 points on certain days. So here's the situation. Trade today as move 2. The higher the gap up pre-market, the higher the probability of a reversal. Okay, the Sanders put has not played out yet. We briefly talked about that, but expect some more stuff coming and hitting the bulls on that front. Job reports this Friday, huge catalyst for a significant drop. Tesla action pre-market, it's hitting 900 bucks, guys. That actually tells you that the market is indeed on the verge of a collapse. When people are blindly just simply buying shit, no reason, no rhyme, no nothing, okay, that tells you that we are at the very, very top, okay? And yes, we're going to day trade Tesla. We're going to do all kinds of crazy stuff with that. But the trade of the day I want you to focus on is very simple. Travel stocks remain the best shorting opportunity. RCL announced earnings, and we're going to review how exactly what level to come in and initiate the trade, what level to get out. BKNG, as pointed out in the video yesterday, your best entry on BKNG, shorting it, is going to be today at about 10:15 a.m. So while bulls are happy pre-market, this will turn into a happy end for bears. So clearly, an average trader is blinded right now by the market is actually gapping up, second day higher. Now, we said, based on the historic analog and 13 market moves formula, that this is likely to happen. We actually broken that down. I'm showing you in just a second exactly. But what you need to know about yesterday, despite of the move higher, okay, it was a move 11. We're tracking for a solid move 2 based on the 13 market moves and the historic analog. Now, you should also understand that tomorrow could be a huge gap down, and so is Thursday. And things are going to gap down Friday as well, followed by a slight reversal by the end of the day. Now, we are not going to spend a whole lot of time reviewing the historic analog right this second, but yesterday we basically said there's going to be two variations yesterday. One was a move 11, now the one was a move 6. We've pointed out the level to 32.46, guys. This is exactly what took place yesterday. Now, that gives us a higher probability of this sell-off going into the close right here. And yes, we're still targeting that level of 33 on that. As you can see in the video yesterday, both videos I posted yesterday, we showed that based on the historic analog, this was going to be a move yesterday on Monday, and that's exactly what we got. So look at what's going to happen today based on the historic analog. Yes, bounce higher pre-market, but look where we end up. We end up nowhere close to where the market opened. So you want to short this bounce, guys, because this is what's about to happen next. Gap down tomorrow, gap down the next day, okay? And a lower point set on Friday, ultimately followed by some buying behavior, which will reverse again on Monday. So short the bounce Monday and expect another move, a substantial move lower before the market will bottom on next Wednesday. So based on the historic analog, we are going to travel on S&P 500. Now, bulls, clearly, they don't want to believe that. That's fine. Your goal is to actually capture this phenomenal trading move that's going to materialize over the next few days. We are going to travel all the way to 3,025 on S&P by February 9th, 2020, guys. The historic analog, to give you a bigger picture, this is where we are. This is what's about to happen. And most of the people are blinded. They don't want to see it, but we'll see. We'll keep track of the daily moves each day, and we'll notify if anything changes. But right now, everything is playing out pretty much to a point as far as the historic analog. So far, pre-market, I'm recording this about an hour before market opens. We're at 32.87 in S&P, while VIX is actually at 16. possibly going to undershoot slightly below 16 before it's actually going to bounce. So your idea is to buy VIX calls as it's hitting these levels, because this support level at 16, could it drop to like 15.8, 15.5 at some point at the market open? Sure, but then it's going to reverse and go higher. So this is your ideal entry to buy VIX calls. This is your ideal entry, 32.87, 32.90, 32.95. Those are your ideal entries, which actually coincide with your ideal entries last Thursday when the market was hitting this level. This is the bounce that you want to short. Okay, the plan for today, February the 4th. So we're opening with a big gap up. Okay, this is your area, as just indicated. Okay, when we get here, okay, we may not actually hold this first half an hour or an hour of the trading session. We may start reversing sooner. So you may want to start stair-stepping into the positions right at the open. But ideally, if you exercise a little bit of patience, okay, if we do move to a level of 32.90, 32.95, boom, that's your perfect ideal entry, because after that, shortly after that, we will start dropping off. Expect this reversal, guys, that you see right here to start materializing, but between 10 and 11, it could be sooner. So do start buying some positions at the open on the put side. Now, with that said, expect us to hit a level of 32.46 by about 2:45 p.m. By the end of the day, we are at 32.33. Okay, plan for February 5th, guys. We are going to open with a gap down. Try to stage a small bounce and then reverse and go lower through the rest of the day. Levels for trading February 4th today on a 1-day, 1-minute chart. Basically, that's your entry, 32.87 to 32.95. That's your entry on the put side. Your first exit level is right here, 32.46. Second exit, 32.33. And pay very close attention to how the VIX is behaving. At some point between today and tomorrow, VIX could actually break above 20, and you want to make sure that at that point you don't just have a couple of contracts, that by that point you got a sizable position on. The trade of the day, RCL 120 puts on bounce. Earnings report is good. We want to short it based on what the chart is telling us. This RCL stock, Caribbean Roll Cruise, is going to create a mighty reversal and finish substantially lower where it's trading pre-market on low volume, currently at 122.89 at the time I'm recording this. So as soon as the stock opens, pull the trigger and buy some puts, specifically the 120 puts on the bounce. So here's your entry. It's going to be fighting this gap down that was created a few days ago. Boom, that's your ideal entry right here. Between the level of 122, 124, expect the stock to reverse all the way down here. So your exit one is right here at about 114.50. Exit two is all the way down at about 107 bucks. Okay, psychological clock data, as everybody is turning their clock backwards. Okay, after the drop that we've accurately predicted on Friday of 600 points, the last couple of days, the bounce matches perfectly the historic analog. So right now, the psychological trading clock for everybody has reversed. Now, everybody does not see the crash coming, which is going to coincide with an ultimate perfect best entry. Understanding the moves is key, guys. Yesterday was a move 11, which is a bearish move, despite of how the markets were, despite the fact that the markets were actually trading in the green. This was a bearish move. 2-day sequence is 311. 311, guys, this is not the end of the sequence. In other words, there is, when you get a 311, it basically tells you the market drops, it tries to go higher, it's unable to do so. In other words, any pop is not going to be maintained, it's not going to stick. You want to short the bounce in that case. So here's how 311 looks on the 2-day chart. 5-day sequence, 794, 311, especially when this 311 follows a huge change of direction in the market move 9. That is definitely something to pay attention to. We're likely to see this, a continuation of what we've seen in the last 3 days, basically a pyramid move 11 type formation 3 days in a row. Expect it to happen again today. Basically, a move 2 has the highest probability, so trade today is move 2. VIX is likely to maintain this level despite surrendering some ground pre-market. Basically, short the bounce, guys, is the key takeaway. Focus on trading historic analog and shorting tech stocks, semiconductor stocks, AVGO, LRCX, Amazon, Google, Facebook, Apple. Short all of them on bounce today pre-market. After we open, if they go a little bit higher, that's your ideal entry. Get in between 10 and 11 and expect a sharp reversal lower. With that said, guys, trade like a rock star. I'll catch you on the next trade soon.